This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today, I'm very excited about a very special guest, possibly one of the more important futurists of our time today. And then we really do need some people that can look into the future. And his name is Jim Rickards. We've interviewed him before, and it was on The Road to Ruin, the Global Elite Secret Plan for the Next Financial Crisis, which I read. Fantastic book. And then I was driving around Montana with another friend of mine, and we were listening to Jim on audible.com, and it was like I never read the book. And you can ask Kim, I've been walking around, I've now listened to the book 14 complete times, which means it's 14 hours, I believe, times 14.
Yeah, I can't talk to you anymore because you've got your headsets on day and night.
I look like Mickey Mouse walking around with these headsets on. And I'm just listening to what I think one of the most important, not only financial guys, but also futurists. You got to look into the future. So for those of you listening, this is a very important program, especially if you want to see what's coming in the future, which is today. So I'll just give a quick background. The reason I'm absolutely thrilled with James is because the definition of intelligence is if you agree with me, you're intelligent. And Jim is very intelligent because he says things I've been saying for years with no agreement. Stuff like quit your job, get your 401k out of there. You're trapped in this little box. You're about to get hammered. And, Wall Street doesn't like my message. So anyway, I'm very happy to have James Rickards here. And where my whole education began, I was flying off a carrier in Vietnam for the U.S. Marine Corps. And I was sitting in the ready room, and the snail mail letter came from my rich dad, and he says, "Hey, did you know that President Nixon took the dollar off the gold standard last year?" And I didn't even know that. It was August 15th, 1971. And I said, what does that mean? What does that mean? And the reason I'm really appreciative of James' books, the books are Currency Wars, The Death of Money, The New Case of Gold, and The Road to Ruin, the Global Elite Secret Plan for the Next Financial Crisis, fills in many of the blanks I could not figure out as I kept asking the question, what does it mean that President Nixon took the dollar off the gold standard? So with that, one of the most important guests we have, and he is forecasting possibly, which I've also said, the biggest financial collapse in world history, possibly. The biggest in history. So be prepared. For those of you who think, tomorrow will be the same as yesterday, I think you're in La La Land. So welcome to the program, Jim.
Welcome, Jim.
Thank you, Robert. Thank you, Kim. It's great to be with you again.
Yeah. So before we scare the what out of people, can't you give them a kind of a little ray of hope? Because I think you did that for me, because I was on suicide watch, reading Road to Ruin. And what you told the story about the one-third, how wealth is really preserved no matter what happens in the economy. So would you mind starting with that? Then we get into what you see coming.
Well, thank you, Robert. And I think I can give more than a little ray of hope. Hopefully I can give a very bright, sunshine ray of hope, if you will. We're not helpless. We have choices. We make choices. And so to me, it's all about the choices and understanding history, understanding the dynamics, looking forward, and thinking about how to preserve wealth. And I was once on a TV program and one of the financial networks, and got in a debate with a host, and she was yelling at me about, I recommended gold, and gold wasn't going up that day. The way everyone has such short attention spans, you say something on a Tuesday, and it's not true. It doesn't happen on Wednesday, and somehow you're an idiot because it didn't happen in 24 hours. I was like, well, give it time. But I made the distinction between making money and preserving wealth. I said, those are two different things. You basically make money on your talent because you work hard, or you're an entrepreneur, you got a pizza parlor, a car dealer, a dry cleaner, you're a doctor, lawyer, you're an author, whatever it may be. You make money on your talent, but then when you have it, you have to preserve it. That's a completely different skill, and that's what the third is all about. And I'll talk specifically what we mean by that, but this came up in a conversation. I was in a place called Palazzo Colonna. Palazzo Colonna is a private home. It's a palace, a palazzo in Rome. And it's interesting for the ultra-rich, it's completely nondescript from the outside. It's kind of got like stucco walls. If you drove by it, it's like boring, brown, old, does not catch your eye at all. But, man, you go through the gates and you get inside into the courtyard and the galleries and the museums and the marble floors and the gold pillars and everything. You've never seen anything like it, and it's an unimaginably rich environment, priceless art, et cetera. But the point is, this palazzo has been in the Colonna family since the 13th century. We're talking 800 years. So this isn't, in the U.S., people talk about the new money from Silicon Valley or Wall Street, and then there's the old money. And by old money, we mean, the Rockefellers and the Vanderbilts and the Astors and some of those, the Whitneys and some of those names. But that money is maybe 100, 150 years old. In the case of the Astors, 200 years old. But here's a family fortune that's been around for 800 years. And think of what you had to survive to do that. It was not just like a down stock market or something like 1987. I mean, they had plagues, they had invasions, the Counter-Reformation in the 16th century, the 30 Years' War in the 17th century, the wars of Louis XIV in the 18th century, Napoleon in the 19th century, World War I, World War II, the Holocaust. I mean, think about what you had to survive. And the family is still wealthy, and they still live in this palazzo. So I was sitting next to this lady, very wealthy European, and I said, it's one thing to preserve wealth through a business cycle or a couple hundred years, but how do you do it for 800 years? How do people do it? She just looked at me and she very calmly said, a third, and a third. And I said, okay, what does that mean? She said, 1/3 gold, 1/3 land, 1/3 fine art. And obviously you have some cash for day-to-day necessities or whatever else you need. There's a cash slice in there. But a third in terms of wealth preservation. And, let's just go back to 1620. You're in Bavaria, early 17th century during the 30 Years' War, and Wallenstein is 2 miles away, and he's burning down everything in sight. And what you can do, you put your gold coins in your pouch, you take your art off the wall, roll it up, stick it in a backpack, get on your horse and ride away. And then once he's done burning everything down and the dust settles, you come back, you should be able to reestablish title to your land. You put your gold coins on the table, you put your art back on the wall, and you're rich. Everyone around you is wiped out. And I mean, just to bring that down, that sounds, gee, what advice can we get from the 18th century, or 17th century? But think of Cuban Americans today who were dispossessed by Castro in 1959, 1960. All their property was taken over. Well, when those people left and came to Miami, a lot of them took the deeds to their houses. They might have had gold, coins stitched in the lining of the clothing. I actually know good friends of mine about my age came over as 9, 10-year-old children in 1960, and they had gold coins, like I say, in the lining of their clothes. But a lot of them bought their deeds or copies of the deeds or whatever. And I promise you that the State Department, in the course of normalizing relations with Cuba, is going to seek justice for those people, and they may get that land back, or at least they'll get fair compensation. But in many cases, they'll get the land back. So that actually works. Now, people say, well, wait a second, Jim, this is the 21st century, the modern age, there's no 30 Years' War going on. Well, don't be so sure. I mean, you go through history, there are much more periods of collapse, turmoil, war, social breakdown than perhaps we are today. Perhaps we're too complacent, but when I look at the situation with North Korea, and it's not just war, it's natural disasters. Look at, talk to the people in Puerto Rico. One of the biggest, great tragedy in Puerto Rico because of Hurricane Maria, and everyone was, they're short of gasoline, they're short of water, which is true. But you know what the main shortage was?
What?
Cash. because when there's no electricity, the ATMs are shut down, the banks are shut down, and people were going to stores. Now, the shelves were kind of stripped bare, but maybe they had something. But the merchants were saying, well, pay me in cash. I can't use your credit card. I can't take your debit card. I can't process it. There's no telecommunications. By the way, our friend Warren Buffett, famous stock investor, right now he has $100 billion in cash. That's how much cash is on the balance sheet of Berkshire Hathaway, his holding company. So if everything's good, why does Warren Buffett have $100 billion of cash? Well, he knows that everything's not good. He knows the system is bubbly and prone to collapse. And he's famous for waiting for that to happen and then, like I say, going out and picking up bargains. So there's a place for cash as well.
Again, this is James Rickards. I would call him right now a futurist. He talks about being a raven. A raven is in Greek mythology is the bird that can see the future. And I sent Jim pictures of our two ravens that sit on our driveway. And I never knew that. I just like seeing the future because I was a student of Dr. R. Buckminster Fuller, a futurist. And he was the one that warned me about this time today. And what you say and what Fuller says and what we're seeing coming is what Fuller says we're going into one of the biggest transformations in world history, not just U.S. history. But in the meantime, everything might come apart. So that's why this James Rickards, he's a New York Times bestselling author and economist, The Road to Ruin, The Global Elite Secret Plan for the Next Financial Crisis. Please read that book if you want to preserve your wealth. His also other book was The New Case for Gold, which my advisors and I studied. The Death of Money, which is absolutely eye-opening and fantastic. And the book I first read was Currency Wars. So for those of you out there who are saying, oh, well, I don't know, tomorrow's going to be the same as last year, I think you'd better wake up and smell some coffee, because when we come back, we'll be talking about why Jim says to have one-third, one-third, one-third.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki. Log on to richdadradio.com while you listen. Now back to Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android. And to listen to this program again, all of our programs are archived at richdadradio.com. I personally believe this is the most important person you can listen to today. And again, I said the definition of intelligence is if you agree with me, you're intelligent. And Kim will verify everything Jim has been saying, I've been saying is coming also. So I believe we're on the biggest precipice of a massive, at least a crash and possibly a collapse. And the way I define a collapse is 3 crashes in a row with no recovery. And the reason for it is that Nixon took the dollar off the gold standard in 1971, which allowed everybody to print as much money as they wanted, which is why at Rich Dad we've been saying the rich don't work for money, savers are losers, and instead of getting out of debt, learn to use debt, because money is now debt after 1971. But also watch out for that 401k full of stocks, bonds, mutual funds, and ETFs. So with that, our guest again is James Rickards. He's a New York Times bestselling author and economist. His latest book, The Road to Ruin, and Kim will verify it. I've been walking around my house looking like Mickey Mouse, listening to this over and over. And I pick up a couple of things that Jim will say, and I'll just go into it and then research what he said, just so I understood it better. So before we go on, Jim, would you mind giving everybody, before we go into the eve of destruction, now that you give them the happy days version of one-third, 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 what caused you to see the world from this point of view?
Well, my financial education, Robert, kind of started around the age of 9 or 10 at the dinner table. But you mentioned being a Marine on an aircraft carrier and getting a letter from your rich dad. I had a rich dad also, not financially rich, but rich in wisdom and love and shared experience. And he was a Marine. He was in the 1st Marine Division, fought in World War II and in the Pacific, and as part of the occupation of China. And so as a 9-year-old, we were always, as little kids, where it was like, Dad, tell us, we want to hear combat stories and everything. He never talked about that, never talked about the, it was only much later as an adult when I read about Peleliu and Okinawa in depth that I understood what he went through. But we were kids, what did we know? But he would talk about other things, and one of the things he always mentioned was he was in the occupation of China. So really, at the beginning, he actually got a Cold War medal in addition to World War II medals because he was in, that was 1946, and China was the beginning of the Cold War. Now, at the time, it was still nationalist Chinese. The communists were on the rise, but they hadn't taken over yet. Chiang Kai-shek and the nationalists were in charge. My father's in the Marines, and they were occupying. They were in a place near Shenzhen. And he told me about the hyperinflation of the nationalist currency. Now, most people are familiar with the Weimar hyperinflation, Weimar Germany in 1922, and walking around with wheelbarrows full of cash and so forth. And all those stories are true. But my father said we had to have wheelbarrows full of Chinese yuan to go down and get a case of beer for the barracks because that's what it was. So I learned about hyperinflation from my father, who had experienced it firsthand. And the other thing my father did, he always carried a $20 silver certificate in his wallet. And I guess that little 9-year-old kid, he'd pull out two $20 bills, he'd put them down in front of me, and he'd say, read this, what does it say? And I would say, well, silver certificate. He said, read this. It'll be a new one. And he said, what does it say? I said, Federal Reserve note. And he would slam his hand on the table and say, that is not backed by anything. And he would make the point that in the day you could take the silver certificate into a bank and they would give you silver. They would give you 20 ounces of silver, 20 $1 silver dollars for, can you imagine getting 20 ounces of pure silver for a $20 bill today? I mean, good luck with that. You get 1 ounce if you're lucky. So I learned about hyperinflation. I learned about gold standard and silver standard and fiat money as a 9 or 10-year-old from my father. Now, I probably put that, in the back of my mind and then went through, college and graduate school and law school and had a long career on Wall Street and worked in derivatives and hedge funds. And that was all the paper and the leverage and the contracts. And I was expert in all that. I mean, I invented, along with another guy, the sovereign credit default swap market. We did the first one when I was at Long-Term Capital Management in 1994, even before.
Was your father disappointed in you?
He was. Well, the one thing he did ask me, because I went to college, then I went to graduate school, got a degree in international economics, then I went to law school. But then I went to graduate law school specializing in taxation, LLM, Master of Laws in Taxation from NYU. So I was about 30. He's like, when are you going to get a job? Keep going to school. But eventually I did. I settled into banking and investment banking and hedge funds and all that. But the other thing about, just to kind of bring it back to the education for a second, Robert, I did graduate school in international economics. I was class of 74. I was the last class that was taught gold as a monetary asset because Nixon went off the gold standard in 1971. That's right, but it wasn't the end of the gold standard. It was the end of gold convertibility for dollar holders. True, but the gold standard kind of stumbled and bumbled around for a couple more years. The French wanted to return to it. They thought that it was a temporary suspension, and they would devalue the dollar and go back to gold at a new valuation. Exactly what FDR had done in 1933, the Bank of England did in 1931. But they never got back to it. They just, Milton Friedman came up with this floating currencies and all this stuff, and then one by one the world abandoned gold. But when I was in grad school, it was still a monetary asset. You still had to give gold to join the IMF, and I studied it, and then that's it. They just stopped teaching it. So I tell people, if you're younger than I am and you know anything about gold, you're either self-taught or you went to mining college because the universities just stopped teaching it. It's not taught anymore. You can't find an American, under, let's say, the age of 60 who thinks that gold is a valuable financial asset or it has a monetary role, and they'll give you all the usual arguments, barbarous relic and all that stuff, all of which, by the way, I demolish in my book, The New Case for Gold. I just got so tired of hearing these arguments. I said, I got to just take them one by one and shoot them down, and that's what I did in the book. So that's a little bit of my monetary background.
Fantastic. Well, once again, this is Robert Kiyosaki, the Rich Dad Radio Show. Probably the most important guest of our times. Again, I call him the Raven now because the Raven can see the future. And I was a student of Dr. R. Buckminster Fuller, also a futurist, and he's saying the same thing that Jim is saying, that we're on the eve of destruction now. Not tomorrow, not next week, but now. And all for the same reasons, what Jim calls the global elites. So we're here right now. His books are The Road to Ruin. Please get that book and read it. His other book is The New Case for Gold, April 2016. Please get that book. And The Death of Money, that is a very powerful book. And also his first book, Currency Wars, is where I first came across Jim. Why are we on the eve of destruction now?
Well, what I use to analyze this, Robert, when I say things like this, by the way, I think you know me well enough. I never make a claim without backing it up. I'll say
my God. Wait, Jim, I've never met a man who backed up more than you. That's why I walk around with Mickey Mouse ears on all the time, so listening to everything you said, because you back it up. And I was kind of guessing in large chunks. So I appreciate what you've done in backing it up.
Yeah, and the Road to Ruin has 155 endnotes. You don't have to read them; they're in the back, but they're there if you want them. And they're not; those endnotes are not to fringe conspiracy websites or whatever. It's IMF documents, Treasury documents, United Nations documents, etc. So it's all there. You can skip them if you want, but if you want to drill down, it's all there. But I use a couple scientific disciplines to make my forecasts, as did Buckminster Fuller and Alvin Toffler and other noted futurists. And one of the main ones I use is complexity theory. I use three others: Bayes' theorem, which is a branch of applied mathematics, behavioral psychology, and history. But the one I'll talk about right now is complexity theory. Now, there's nothing new about complexity theory. It was invented or discovered in the 1960s, and maybe relatively new in the history of science. But it's been around almost 60 years at this point. I didn't invent it, but I'm one of the pioneers, not the only one, but one of the pioneers in taking complexity theory and bringing it into capital markets where it is not widely used. It's used in earthquake science, forest fire management, cosmology, many other fields.
But you also talk about you work with the CIA because they have to use it because they can't depend upon the past. They have to be able to see the future. Is that correct?
Correct. I was tapped by the CIA to come in and help them after 9/11 because there was, I think it's well known, I talk about this in my book, The Death of Money, there was insider trading ahead of 9/11. Clearly, there was a large group that knew about the attack, in addition to just the terrorists, the attackers themselves. And the last two trading days before 9/11, in buying put options, and when you buy a put option, it's a bet that the stock's going to go down. The volume of put options on American Airlines and United Airlines was 286 times the average daily volume in those stocks. So it's like a guy who orders a tuna sandwich every day for lunch, and then one day he orders 286 tuna sandwiches. You know that something's up, right? That's not the normal lunch order.
Can I just interrupt? What when you say they, who's they? You said people that had insider trading.
It's a good question, Tim. Kim. It's a good question, Kim. It's these are terrorist associates. So look, nobody works in isolation. Because when I first started bringing this up at the CIA, I encountered a lot of skepticism. They said, "Oh well, they would never compromise operational security by trading stocks ahead of the attack." I said, "Wait a second. Nobody's saying that Mohammed Atta stopped off at Charles Schwab on his way to Logan Airport to hijack a plane. That didn't happen. But everybody has a mother, father, sister, brother. You have a
who wants
driver,
to make a few dollars.
A safe house operator, exactly. And people cannot, there's something about human nature that cannot resist the sure thing. So the attack was known in the social network of the terrorists, and that's documented in the 9/11 Commission report, which I read cover to cover, including the endnotes. And then they say, well, nobody would do that. And I say, I have a two-word answer for that. Martha Stewart. Martha Stewart was a legitimate billionaire. Martha Stewart made $1 billion legitimately through hard work, and she ended up behind bars on a $100,000 stock trade. So
on a tip from Sam Waxel, right? I mean, give me a break here.
Exactly. So what better evidence?
What drove her to do that? Yeah.
Yeah,
and
you're
she
a
goes
billionaire.
to jail.
So why would you go to jail for $100,000 when you're a billionaire? The answer is because people can't resist the sure thing, and that's what leads people to do it. And a $5,000 option trade with 10-to-1 leverage, you can make $50,000. That's a lot of money to a safe house operator or a cook. But and people say, well, why was it 286 times average daily volume? That's a big number. And the SEC and the FBI never got to the bottom of it, or at least they never admitted it in the 9/11 Commission report. And the answer is something which I identified. I call it signal amplification. So the terrorist is going to do like a 5,000 share lot or whatever. Okay, but the specialist sees the order. So the market's up, airlines are up, the sector's up, but somebody's buying puts. They don't know you're a terrorist, but they say, you know something I don't. So I'll buy some from my own account. I'll buy 10,000 from my own account. Then some upstairs trader at a hedge fund says, 15,000 just across the tape. I'll buy 50. Somebody else says, I'll buy 100. So by the end of the day, you've traded 1 million shares, 98% of which are completely legitimate. It's just people piggybacking on the original trade. But the problem is when the SEC investigated, they're not intelligence analysts and they're not mathematicians. They're cops, right? And what I did at the CIA, they said, well, okay, so if that happened, which it did, if there were going to be another spectacular terrorist attack, would there be insider trading? Could you spot it? Could you trace it to the source, get a FISA warrant, break down the door, stop the attack, and save lives? And the answer was, we did a 2-year strategic study answering those questions, and the answer was yes, 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 and yes.
Yeah, so that's why everybody, this is James Rickards. I think he is the most important futurist economist, smart guy. You can listen to it right now. He's a New York Times bestselling author. His book is called The Road to Ruin. He talks about the put option as the choice of terrorists in the death of money, and why the U.S. dollar is going to die soon, and the economy may all come down all at one time. And we'll find out why that's going to happen. Hopefully it won't happen, but why we're on the eve of destruction right now. We'll be right back.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki. This is the Rich Dad Radio Show, the good news and bad news about money. Here's Robert Kiyosaki.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, you can listen to this program anytime, anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com. We archive them so you can listen to this again, so you can pick up things you might have missed the first time. But more importantly, you can talk to your friends, family, and business partners and listen to this program, especially with James Rickards, and discuss it. Because we started the program with kind of the good news, the one-third, the one-third, one-third. Now, if you missed that, go to richdadradio.com and re-listen to this whole thing, because now we're going to go into why this baby is coming down. And back in 1999, I started writing a book called Rich Dad's Prophecy, and I was calling for the crash to hit on 2016. And it didn't happen. And I never understood why it didn't happen, because the stock market kept going up. And when I read James Rickards' book, Currency Wars, number 1, number 2, The Death of Money, please get that book. 3, The New Case for Gold. And The Road to Ruin, his latest books, The Global Elite Secret Plan for the Next Financial Crisis, you'll better understand why we're on the eve of destruction right now. So in reading James's book, The Road to Ruin and The Death of Money and The New Case of Gold, I understand why my forecast, which came from Dr. R. Buckminster Fuller about the 2016 crash, was what Jim calls it was truncated. I mean, the elites or the grunge or the people that control the system just stopped the collapse from coming. Is that correct, Jim?
That's correct. In other words, but it's happened twice already, Robert. One was 1998, and the other one was 2008. Now, there have been other crashes. October 19th, 1987, the stock market fell 22% in one day. By the way, from today's Dow level, Dow Jones, 22,000, a 22% decline would be 4,000 Dow points. Not 400, 4,000. If the Dow fell 400 points, it would be every headline in the world. Well, imagine 4,000 points. That is what happened on October 19th, 1987 in percentage terms. 1998, we were hours away from shutting every market in the world, but Wall Street bailed out the hedge fund, long-term capital. In 2008, we were hours, if not days, away from every bank in the world failing, but the central banks bailed out Wall Street. So both times, the collapse that you're talking about, that I'm talking about, was underway. It was happening, and but for government truncation, government intervention to stop it, it would have played out exactly as we've described. Now, the problem is the government intervention is not cost-free. It comes with a very large cost, which is that each crisis gets bigger than the one before, because all you do is you lock the system in place. You don't clean out the rot. You don't clean up the balance sheets. You don't get rid of the bad paper. You let it sit there, and then you let it grow, and then the next crisis comes, and it's bigger than the one before. The problem is we're now at the point where, again, 98, Wall Street bails out a hedge fund, 2008 central banks bail out Wall Street. Next time, who's going to bail out the central banks? The answer
Jim,
is no.
Jim, that's the question I'm asking, because we talked to some friends of ours and we talk about this coming, and they're like, "Oh, no problem. The government will just bail us out again." And you're saying that's not going to be the case.
Right. There's a reason for it, Kim, which is that, okay, what did the Federal Reserve do the last time to bail it out? Well, they did two things. They cut interest rates to zero, kept them there for 6 years, and then they increased their balance sheet from $800 billion to $4.5 trillion. Here's the problem. If somehow they had normalized, so interest rates were back to 2-3%, the balance sheet was back to $800 billion, or even $1 trillion, let's say, I'd say, hey, nice going, guys. You saved the world, you normalized your balance sheet, you're ready for the next time. But that did not happen. They have not normalized interest rates. They have not normalized the balance sheet. Okay, interest rates have gone up to 1%, but you need 300 or 400 basis points, 3 or 4% of cuts to get out of a recession. Well, you can't cut 3% if you're only at 1%. Same thing with the balance sheet. Okay, they started the normalization literally just a couple of days ago, October 1st, but they're still over $4 trillion. They're nowhere near. It's going to take years to get down to where they should be. So the point is, if the crisis happened tomorrow or even 6 months from now or next year, they don't have the capacity to cut rates and print money the way they did the last time, because they used it up and never normalized. So that's the point.
Yeah, so as I was watching the stock market, it kept going up. The reason, as you say in your book, The Road to Ruin and especially the Death of Money, is because the savers had no place else to go because there was no interest rates. They left the banks and went into Wall Street, which jacked up the price of stocks. Now everybody is set up. So it didn't happen because the stock market kept going up. So what happened? You talked about there's three things that make, one are treasuries, which are, U.S. debt, gold, and then reserve currencies like the euro, the dollar, Swiss francs. But something happened on October 15th, 2014 that you said was earth-shattering. What happened on that day?
There was a flash crash in Treasury yields. Now,
that's U.S. debt.
U.S. Treasuries, exactly. U.S. Treasury notes. It was in the 10-year Treasury note. Now, bond math, the way it works, Robert, is yields and prices are inverse. So if interest rates are coming down, prices are going up. So this was not a crash in prices; it was a crash in yields. But the point is, within literally 30 minutes, it dropped about 60 basis points. Now, that's a move that usually takes like 6 months or a year in a volatile market. Sometimes you go 2 years without seeing those kinds of moves. But this happened literally in a matter of minutes. And the reason it happened is not because there was some news flash or everybody changed their mind. It was because of automation. It was because people set up these computerized stop losses. So it says, well, if it goes down a little bit, I automatically want to sell. Well, you sell, it goes down more, somebody else sells, and they keep hitting all these triggers. There are technical names for it, but it's the same thing that happened in the bond market as happened in the stock market October 19th, 1987, which we talked about earlier. And there's also another flash crash May 2006, so May 10, 2006. So the point, 2010. But the point is, these things keep happening. They're scary when they happen. People investigate them. They can't get to the bottom of it. And the answer is it's all pre-programmed. It's like gremlins, but it's exactly like what we talked about earlier.
Let me ask you this. Why? I wasn't watching the bond market, so I don't really understand it. But why was the bond market much more significant to you than the stock market, that flash crash?
Well, because first of all, the bond market is a lot larger. People are surprised to hear that. They go, the stock market's big. Yeah, well, it's not as big as the U.S. Treasury market, and it's not as important as the U.S. Treasury market. And countries around the world with trillions of dollars of savings invest those savings in Treasury bonds, as do a lot of individual Americans. So you shut down that bond market, you're talking about shutting down the entire global financial system, because that's how important it is. So to see that happen and see the Treasury have a special commission, they issued a special report. They described what happened, but they couldn't really explain what happened. And what they said is, this could happen again.
Right. So what you're saying, these are the foreshocks, like I grew up in Hawaii where there's always earthquakes. So there were foreshocks, then comes the big shocks, then come the aftershocks.
Right.
But what you're saying, the foreshocks are now increasing. Is that what you're saying?
That's right, and the stock market flash crash, the bond market flash crash. We had a currency flash crash on January 15, 2015. The euro fell 20% against the Swiss franc in 20 minutes. 20% in 20 minutes. These are two major currencies. These are supposed to be money that represents stores of value. Why is one crashing 20% against the other in not in a week or a month, but in 20 minutes? So we've seen flash crashes in every major market: bonds, stocks, currencies, commodities, etc. And they're all warnings. These are warnings to us saying, this market is unstable. These gremlins, if you will, they're embedded in all this computer code. Nobody can untangle it. Nobody can see it coming. One day, sooner than later, it's going to start, and it's not going to stop in a half hour. An hour. It's going to keep going. It's going to spread through contagion, exactly the way disease spreads. It's going to grow exponentially, and it's going to spin out of control in ways that central banks can't stop. So my question for investors is, are you prepared for that?
Right, and that's what we're at Rich Dad. I mean, not to ride your coattail, but that's what we've been saying for years and years, which is why I wrote Rich Dad's Prophecy. But I thought it was at the stock market. The question is this, which you answered for me in the book, is why do people keep doing it? Why do the rich have to keep doing this at the expense of all the other people? And you call it parasitic.
That is correct. And, you go to Wall Street or the central banks for that matter, or academia, and say, well, how do you measure risk? And they'll tell you that we have these, what they call value at risk. We assume risk is normally distributed. That's the famous bell curve. We use regret. They have all this science, right? Well, I've studied it all. I understand it. I understand the math. And it's junk science, meaning it all works internally, but it does not describe the real world. It's not an actual reflection of risk. It's just a self-contained model, a closed model. Now, here's the point, and I use different models, and we talked about those, but my point is, well, what's the matter with these people? Are they dumb? Well, no, they're not dumb. They've got like 160 IQs. I know a lot of them. Are they stupid? No. The point is, they actually know this doesn't work, but they have no interest in fixing it because they make money out of it. If you had a proper measure of risk, you would never do what they're doing. So what they do is they say, let's have a flawed measure of risk that allows us to take a lot more leverage, make bigger bets, make more money. We personally will get paid bonuses. We'll take our money and go buy, they're not investing in the stock market. They're buying yachts and houses on Nantucket and real estate and gold. Every billionaire I know in Greenwich has got gold. I mean, they won't talk about it publicly, but they're buying physical gold. They're relying on the suckers to, kind of load up your 401ks with stocks, et cetera. And so the point being, whether they actually know what works or not, they know that what they have doesn't work, but they stick with it because they personally make money. That's parasitic behavior. I have no problem with Bill Gates being worth $50 billion because he created value. He created more value than he took out of the system. But our bankers on Wall Street, they don't create value. They destroy value, but they still suck you dry. So they're not creators. They're parasites.
So Kim and I have been taking evasive action today. We have tons of gold because we've been sort of we don't save dollars, we save gold. We have no stocks. We're not in 401ks or anything. But also you warned us about banks. What is your warning about saving money in banks?
Well, the problem with banks, look, to some extent, you're kind of, if you have cash at all, I mean, unless if you can pile up physical currency, but then you'll get even if you're a totally honest, law-abiding, tax-paying citizen, they'll still report you to the Treasury on a currency transaction report, et cetera. People think they can get their cash out of the banks, but just try it. You'll get the
we have tried. It's hard to get. It's hard to get your money out.
You'll get the hairy eyeball from the tower. They'll say, "Come back tomorrow," et cetera. So you end up having some of your cash in the banks, but keep it under the insured amount, which is $250,000 per account. You can open multiple accounts if you have more than that at different banks. But what I do is, I keep enough cash for, whatever I need, pay your taxes and pay your bills and take a trip or whatever. But then I'll put it in, whether it's real estate, gold, silver, fine art, all the things I talk about, I actually do. I own stocks, but they're not publicly traded stocks. I own private equity, startup companies, tech companies where I know the owner. I have a paper contract. I'm not relying on some digital, depository trust company or whatever. So there's room for entrepreneurship and stock investing, but I invest in private companies because they're the ones I know.
Which is one thing you also said was something about anything that was digital or crypto and all that stuff. You want something that's, as that woman said in Kelowna, things that last.
Correct. And that's where, again, if I buy if you buy private equity, you actually have a paper contract. I can get on my bicycle and go see the owner. I don't need electricity or transportation or bank payment system to track my investment.
Right. And what about fake gold? That's the thing. I've been talking to people for years. There's real gold and fake gold.
Yeah, well, I buy American Gold Eagles. They're from the U.S. Mint. I have a reputable dealer. So you do have to take precautions, but let's put it this way: I would not buy a kilogram bar on eBay.
What about GLD, a gold ETF?
Well, I don't buy any paper gold. That's a gold ETF. Look, here's the problem with paper gold, Robert. When you most want it, when the price is screaming, it's going up the way I've described, and you most want your gold, you're going to find that all those paper contracts are being terminated, and they'll send you a check. They won't steal your money, but they'll send you a check for yesterday's closing price. And you'll say, wait a second, I want today's price. I want tomorrow's price. That's why I bought it. They'll say, too bad, because they don't have the physical gold to back it up.
Which is kind of what the fractional reserve system is that they can sell you stuff they don't even have.
That's exactly right.
And how much leverage is there, you think, on gold? I mean, if there's 1 ounce of gold, how much?
Well, it's easily 100 to 1. When you take what are called unallocated gold forward contracts from London Bullion Market Association banks, they're the big gold dealers, Goldman Sachs and Citibank and a few HSBC and a few others, plus the gold futures contracts on the COMEX, part of the Chicago Mercantile Exchange, plus gold options, gold ETFs, etc. And you say, okay, how much physical gold is there to back up all that paper gold? The answer is it's probably leveraged 100 to 1.
Wow.
And it's declining, isn't it? And the amount of gold that they can leverage off of real gold is disappearing.
Yeah, I got back from I was in Switzerland recently, and I meet when I go to Switzerland, I don't talk to the bankers. I talk to people who handle physical gold, so refiners. And what they tell me is that customers are taking their gold out of the banks, so UBS and Credit Suisse and Deutsche Bank, and they're moving it over to Loomis and Brinks. Now you say, so you take a gold bar from here and you put it over there. What's the difference? Well, the difference is that if it's in the banking system, it's part of what's called the floating supply that can be used to leverage and manipulate the price of gold. But if you put it in a private vault, it's no longer in the floating supply. It's still gold. It's your gold. But that cannot be pledged or leased or hypothecated or used to create this gold inverted gold pyramid. So the same amount of gold is there, but the floating supply is shrinking. The private supply is growing, which means you have more and more paper gold on less and less physical gold. So this inverted pyramid is getting more unstable. It's going to tip over. Could be any day.
And which is what you also said, that China has now rebalanced into real gold, right?
Correct. They're on the physical side of it. They officially acknowledge 1,800 tons. But I'm certain they have far more than that based on Hong Kong export records, Swiss export records, geological surveys, Chinese mining output. There's enough hard information to form an estimate that they actually have significantly more. No one knows the exact amount, but 4,000 to 5,000 tons versus the 2,000 or 1,800 tons they report is a reasonable estimate.
So, Jim, we're totally out of time.
Wait, I got a question. I got a question.
Kim is crawling on me right now.
I got a question. You asked, Jim, you asked our listeners, are you prepared? So what if they're not? What are like a couple things that they could do immediately to help be prepared?
I would take 10% of my investable assets and put it in gold. When I say investable assets, do not include your home equity because don't bet your house. Do not include your business equity. So like if you're a car dealer or a dry cleaner, put that to one side. That's your livelihood. Whatever's left, once you take your home equity and your business equity out, whatever's left, those are your investable assets. Take 10% of that, put it in physical gold, put it in a safe place, not a bank, and that will serve you well.
Perfect.
So, Jim, I really, 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 really appreciate your diligence and your professionalism and your filling in the blanks for us. So if I could be so bold to ask you to come back again, would that be possible?
I would love to, Robert. Always a pleasure to be with you and Kim.
Yeah, it's fantastic because you fill in so many of the blanks that I was guessing at. So anyway, thank you, Jim. And
thank you, Jim.
Until the next time.
Thank you.
Excellent.
Thank you.
Thanks so much.
So we'll come back. We're going to the most popular part of our program, which is Ask Robert.
You're listening to the Rich Dad Radio Show with Robert Kiyosaki.
And now, The Rich Dad Radio Show and the Rich Dad Company voicemail box are proud to present Rich Dad's #1 fans.
You so you
Rich Dad's #1 fans.
Do you own an LLC or LP? Are you aware of the new rules? The IRS has mandated new audit rules that require every LLC operating agreement and LP limited partnership agreement be amended. This dramatic requirement has never before been experienced, and changes must be made by December 31st. Corporate Direct, owned by Rich Dad advisor Garrett Sutton, can guide you through these new rules. Call 800-600-1760. That's 800-600-1760. Or visit corporatedirect.com. Contact Corporate Direct today to stay in IRS compliance.
Financial freedom begins with financial education. Now back to Robert Kiyosaki and the Rich Dad Radio Show.
Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, you can listen to this program anytime, anywhere on iTunes and Android. And all of our programs are archived at richdadradio.com so that you can listen to this program again, because there was a load of information on there. Once again, thanks to James Rickards. He's a New York Times bestselling author. Please get his books, read them and study them. The Road to Ruin, The Global Elite's Secret Plan for the Next Financial Crisis, The New Case for Gold, The Death of Money, and Currency Wars. His website is jamesrickardsproject.com. jamesrickardsproject.com. And please, read the book. And what I do is after I read the book, I go to audible.com and I listen to it over and over and over again until I understand it. Because we are on the eve of destruction. So anyway, thank you to Jim's Rickards. So Melissa, what's the first question for us, Robert?
Well, Robert, one thing, one of the questions that we often get, we get it many, many times, I'm sure you and Kim hear it, is why did the two of you start and found the Rich Dad Company? Is it the reasons that Jim talks about?
Exactly. Thank you for that question. Because what happened in 1983, I was studying with futurist Dr. R. Buckminster Fuller, also Alvin Toffler, who Rickards mentioned, but also notice his father was a Marine. And we saw things happening in the real world that La La Land in America does not see. So Fuller died in 1983, July 1st, and posthumously his book, Grunch of Giants, came out. And grunch is the same thing as global elites. It's how we're ripped off by the richest people in the world. And when I read Grunch in 1983, I said, I can't sit here and be in rock and roll anymore. I was in the rock and roll business. And I said, my conscience will not allow me to sit still. And I said, I got to do something. And I sold my company in Honolulu, and I was ready to take a leap. And then I met Kim. And I really, I'm not really religious, but I think God sent me the perfect person when I was ready to get on with what I'm supposed to do. Because I believe all of us have a special God-given talent and a God-given purpose. And I said to Kim, I don't know what's going to happen, but we can't just sit here and do nothing, because Fuller talked about around the year 2000, he predicted AI, which is artificial intelligence, UI, which is universal income, but most importantly, the collapse of the current world economic system. It's collapsing now. We're right in the middle of it. But for years, it was really tough talking to people about why mutual funds suck, why you shouldn't have a 401k, how to use debt because the U.S. dollar is debt, why savers are losers, why most of the people giving you financial advice are crooks, charlatans, and conmen. It's been hard. So when I came across James Rickards' books, Currency Wars, I said, man, I get this guy. He gets me. We understand. And when I read all of his books, he's saying exactly everything that Fuller said. Because what Rickards is a futurist, the raven. And if you ever come to our house, we have two ravens sitting in the front of our house. And we didn't know that. It just sits there because I want to know the future so I can prepare for it. Unfortunately, the future is today. Any comments, Kim?
Well, I just want to say about this show with James Rickards, and we talk about repetition, and I would listen to this show again and again. He truly is a fire hose of information, and there was so much that we covered in just that short period of time.
Yes, 3 10-minute sections.
Yeah, and you've been studying this one book, The Road to Ruin, for, 14 times on
14
audio
hours,
tape.
14 times. I look like Mickey Mouse walking around the house with his ears on my head.
But, a lot of, and what you say too, a lot of what he's talking about in terms of how to prepare, we've been doing. I remember buying silver when in 1985, we started buying silver when we were living in La Jolla, California, and stacking it in our closet. And to this day, we buy gold, we buy silver,
we save money.
We have a lot of land. So we do our best to be prepared. I personally, I hope this never comes to fruition, but it's certainly looking like it's a very serious possibility, and there's certain things that you can do right now to get yourself prepared.
Yeah, and he says in The Road to Ruin, this guy raises his hand, and he says exactly the same thing I would have said. This guy raises his hand in a seminar in New York. He says, well, yada, yada. I always get this pushback from these educated people. Well, the guy says, well, I have a job, and I have a 401k and all that. What should I do? And Rickard says, quit your job, get out now. And the thing I loved about The Road to Ruin, he always talks about from, I think it's Vonnegut, Cat's Cradle or something. Nice, so very nice. All these different people trapped in the same device. And when you look at the cash flow game, that's the rat race. All these highly educated people who went to school and all that, they drank the Kool-Aid, they have job security, they're saving money, they have a 401k, they're getting out of debt and listening to other people, I won't mention the names. Those are the people Rickards is saying, nice, so very nice. All these different people trapped in the same device. That's the shrinking middle class. They're getting hammered right now, but they're hanging on to this illusion or belief that they're highly educated, and that's the trap.
And James said, people have such a short attention span, and the silly argument that people give about gold and silver, and I'm not going to buy silver went down yesterday. Why should I buy it? Or gold went down yesterday, and over the year it's not doing very well, and it's not making a lot of money, and there's not a lot of upside, and that's not what we're talking about. We're not talking about this short-term thinking.
FYI is that I was trying to buy my first piece of gold in 1972 in Vietnam behind enemy lines. It was unsuccessful. But anyway, my first piece of gold was less than $100. I still have that piece of gold. Today we're at $1,500. Meanwhile, the dollar has shrunk by 95%. So all you savers out there, wake up. You're the biggest losers on planet Earth, because what Rickards is saying is what the government is doing right now with the elites is they need to destroy the dollar. In other words, they need to make the value of the dollar come down so far so they can pay off approximately 1.2 quadrillion in global debt. So they're going to destroy the dollar while you're still going to the bank saving a little pittance there. Look, savers are losers. The moment you can understand that, that's what my book Second Chance was about. If you can wake up and smell the coffee there, when you see it by saving money, and Rich Dad's lesson number 1 is the rich don't work for money, and I use debt to get rich, which is why the rich are getting richer. I use a team, which is more important than money. This is what the Rich Dad Company was founded for, was this time. It began in 1983. I met Kim in 1984. We practice what we preach. So I thank you all wondering why we formed this company. We don't sell real estate, and we don't sell stocks, bonds, and mutual funds. So you can submit your questions once more to AskRobert@richdadradio.com. Great thanks to James Rickards. Please get his books, and thank you for listening.